deeper into gold. Pete McGuire joining us from XM. Pete, a very good afternoon to you. Thanks for joining us. Is that a gold kerchief I spot in your pocket there?
Absolutely.
Yeah. So what are your observations about what we're seeing with gold and those gold stocks today?
Well, I'll tell you what, it's been boomed to the upside, hasn't it? I mean, game on in the last probably 12 hours, it's been very exciting. Maybe not 12, maybe 9 or 10. It's been very exciting. Our Aussie miners have done extremely well, and the overall price of gold, you're running at about 1964 an ounce. Silver's had a big lift off as well. And the US dollar has been punched down, Andrew. We're nearly through 100 as far as the US dollar index. So it's really cratered in the last probably couple of weeks, and certainly in the last matter of hours.
When you talk about the US dollar, Peter, of course, we often see that inverse relationship between the greenback and gold.
Absolutely, Andrew. As far as, US dollar coming off, gold's had a really, that's just how it rolls, and it's been dynamic. And I'm just looking at some notes, and we punched through that report. It's been very, very dynamic. The gold market, it's been volatile. You're only $100 off, or about $108 from all-time high. And let's just see where this US dollar goes, because if you only get one more rate rise, that's pretty well baked in on the 26th of July, and I reckon that's already baked in as far as the US dollar, then you could see, a 99 handle as far as gold, and I'm thinking maybe a nice tick up over 2,000 for the precious metal very, very shortly.
What are the risks, though? What are the downside risks for gold at this point?
Let's see what happens as far as, if inflation starts to edge up high. You've got crude oil nearly at $80 a barrel for Brent. It's sitting at about 80.20 at the moment, and you've got WTI nearly $76 a barrel. They've had very strong moves to the upside. So if inflation starts to bite again, then that's going to be a real curse for, I think, gold in some ways. But I think overall there's a lot of fear still in the market, big theme fear, overpricing of assets could help gold. So, yeah, a lot of people out there are buying it from a retail perspective. And, of course, all the central banks are jumping on it like there's no tomorrow, Andrew.
Interesting just to see how gold has behaved, because traditionally seen as a hedge against inflation, that hasn't necessarily transpired. Also seen as a safe haven asset. Also, not necessarily so at this point.
No, exactly right. I mean, that was a mindset very much, at 80s and 90s, and certainly safe haven. And we're looking at, these particular asset classes for safe haven, somewhere to hide. But what we've been through in the last couple of years, that was a good indication as far as, staying away from the market when markets crash like they did in, 2020 with the, or 2021 with the COVID. And then what happened after that, as far as, that big pushback and rebound in asset prices, gold has been choppy from 1,600 all the way through to, 2,070. So it's just, I think its best days are ahead of it. It's hard to put a forecast where it's going to be, but I think I've got to stay line in the sand, Andrew, like the big banks. 2,200's the next target, and it could be there sooner than we think.
So would you be investing directly into gold, or also playing with those equities at the same time?
I think you've got to be in both. I think that a lot of traders, Andrew, are looking at very much physical. They're staying away not necessarily from the paper market, but a lot of people want it under the bed, and they're very conscious as far as, the somewhere safe, somewhere, retail and jewelry. Everyone's got their own mindset on it. Very, very, very highly traded in a physical market across, India and China and all over Asia and the Middle East. So that appetite hasn't waned at all, and jewelry consumption's up. And you've only got to have a look at the price of. I was looking at a watch the other day, and they went up. Their price rise was $2,500 on a watch, just because of the impact as far as gold pricing hedging up. I wasn't going to buy it, Andrew, a bit out of my league, but that just gives us an idea. Everything's being pushed up.
No one buys or wears a watch these days, Pete. Come on, you know that. There's no point.
Maybe not, I suppose. Yeah. Maybe only the old people like me, Andrew, and you.
Pete, you did mention oil there. What are you seeing? Because as you pointed to, it pushed above $80 for Brent for the first time since May. It has been under pressure. Obviously, a lot of that weighed down by what we're seeing in China at the moment.
Yeah, well, you're absolutely right. I mean, it's had a very solid move, and I'm conscious as far as China, and we might see a bit of a turnaround there in the next couple of weeks and rebound. They've certainly had Hong Kong's well up today, about 2.25%, 2.5% up on its equity markets. The CSI 300's bid up, and China's looking relatively strong for the day. So yeah, I think overall the consumption. You've got the issues as far as the Saudis and what's happening in Russia, pulling back production. So if they have another leg down of production cuts because they want higher prices with a cratering US dollar, then I think you wouldn't be surprised to see it back at 85 for Brent very, very shortly, Andrew.